How we doing? Real quick, I do apologize for not uploading for the past 2 days. I'm experiencing this really odd thing where I feel bad when I don't upload every day. You know, it's kind of like I feel like I'm doing something wrong. So there were just a couple things that I had going on, and videos didn't make it into the schedule. And I'm changing that right now because I'm starting to get my groove back. So I do apologize. The plan has always been the same, though. And boy, is it paid. If you're a fan of leverage, degeneracy, absolute moronic investment decisions, and services that provide the features to capitalize, look no further than BINGX. That's right. You like leverage? Yeah? You like 2x, 5x, 100x, 150x? Well, Bing provides, and boy, is it great. Like no cap here. I actually really enjoy this platform. I use it every day. You can trade forex, you can trade indice futures, you can trade crypto, almost anything under the sun, and it's just a great platform. Like no BS. And they have leverage. Live, laugh, love, leverage. Use the code or the link in the description. Sign up and get a free $100 bonus deposit free of charge. Or use the code I54OP8. Indigo 54 Omega Penis 8. All right, let's get into it. So where do we begin? Where do we begin? Like I said, the plan has always been the same. The plan has always been the same. We've been calling out the bear market rally for the past like 2 weeks, 3 weeks. And like I'm not trying to BS anybody, you know, because I feel like some people kind of get carried away with the euphoria of like, oh, rippy, you know. And I mean, don't get me wrong, I'm not innocent of that, but over the past 6 to 12 months, I've actually been pretty good about it. I've actually kind of, you know, developed a sense of discipline, you know. Not everything can go up all the time, and this and that, and rocket emojis and moon and Edward and all that. So, you know, it's kind of been, you know, this revelation. And anywho, so when we were calling out the rally, it wasn't out of clickbait. It wasn't out of copium. It wasn't out of any form of like hopefulness just to be hopeful. Like there was an actual foundation there that we rationalized and wrestled with, and it came to fruition. So let's have a little retrospect here. This is the daily. I'm going to get rid of all the indicators. I'm just going to get rid of everything, actually. I hide everything. And what do we see, right? Most people, I think, about every step of the way here, anytime there was a green bar that showed up, people were buying puts. And I don't blame them at all. The problem was that was both the macro and the micro forecast for them. That was what they expected to have happen. And I had mentioned in a video a month and a half ago, I said, I think we're actually avoiding a crash because people are perpetually hedging for a crash. And if everybody is hedged, then you're not going to crash, because the only way you crash is when the majority, whether that's big money or retail or custodial agents, whatever it is, you only crash when one or many of those particular parties are not properly hedged. And so everybody is hedged. You're planning for, you know, a house fire, and you've coated your entire house in whatever they put inside of fire extinguishers, right? And so this is what you get. This is what you get. Fundamentally, I don't agree with it. Fundamentally, I don't think this is anything that represents what the economy is truly presenting itself as. Fundamentally, I don't think there's any reason that between all of the global tensions, the potential breakout of a new world war, trade wars, cybersecurity wars, which I will be making an in-depth video about why I'm super bullish on cybersecurity. fundamentally, I don't agree with any of this. I think it should be all the way down here. Well, not down there exactly, but somewhere around like the 250s, maybe like low 300s at most. So I don't agree with this, and I think a lot of people get caught up. They aren't willing to entertain the thesis of, okay, we might have a potential bullish breakout for the rest of the year, or that we might have a bottom at this particular point. People don't want to entertain that because most people that are presenting that thesis are the aforementioned, being just hopeful just to be hopeful, or coping, or whatever it is, rocket emojis and Edward. So my point in all this, though, is that I don't agree with this. I don't think this accurately represents what's going on. But the problem is that whatever this chart does is what my P&L and your P&L ultimately reside off of. So that TED Talk out of the way. If we look at this chart, just going back to the opener here, if we look at this chart, right, and I'm going to hide part of it. If you only saw this green candle, right, if this is what you saw going forward, you probably wouldn't think there's any room to it to keep going up. This was the delta here was 5.5%. Sound familiar? And then going to the next day, yeah, it was red. It was pretty red, probably about 4%, 3.5%. Then the next day, he gapped up a little bit, right? Started showing some support, started seeing some buyers stepping in. The day after that, yeah, we had a gap up. We had a gap up. I think most people would call this a hammer candle, I think. Still closed red, though. Still closed red. And so after that, you're kind of like, what could really be going on here? There's no way. We're hitting a resistance. We've already seen this like song and dance play out 2 or 3 times before this. We're down like 25% year to date. There's no way. And then you have this indecisive candle pop up. And now you're starting to second guess yourself. And you know that there's going to be another like CPI print, there's going to be another inflation print, there's going to be some form of FOMC meeting, and you're like, man, there's no way. And then before you know it, gaps right back up, and up, and up, and up, and a little down, but back up, right? Everybody is hedged all the time. And no matter if it's the crypto, I don't want to call crypto a sector, but whether it's like the echelon of crypto, or it's the echelon of inverted like yield curves, or J Powell, or tensions with Asia, China, or Eastern Europe, it doesn't matter. It doesn't matter because everybody is hedged. Everybody is hedged. So now here we are. We just had another 5.5% day. And if we just try to like sit back and look at this without any reference to some headline, right? That's the worst part about all this, is that truly the markets are just one headline away from becoming a disaster. As we've kind of contested these levels down here, it's also worked in the opposite, where the market is one headline away from just screaming to the sky. But if we look at this objectively without any consideration of external events, right? We're just looking at a security, right? We don't know that it's the S&P 500. We don't know that it's the top 500 publicly traded companies all indexed together. We don't know that there's a potential world war going on. We don't know, right? Just look at it like that. And then zoom out and realize that over time, this typically just keeps going up. It consistently goes up, and then when it falls down, it really falls down, typically. But then it gets right back up, keeps going, keeps going. And we've had a hyper-extended version of that. And going into the rest of the year, I think that we have seen the bottom, and I think that we will continue to soar. I think that low 400s, maybe even mid 400s, is really in the cards here. It's insanity. It's absolute insanity. Today, I tweeted about it. I wish I made a video about it. I feel bad that I didn't. But yesterday I was bullish going into the CPI print. I was bullish going into the CPI print. And I was talking with my dad, and my dad said, I would have bought puts. I would have gone short. And we had a great like 2 or 3 hour conversation just about life in general, but we really like touched on the fact of why am I Why am I buying calls into this? And it's because typically when everyone's thinking it's going to go one way, you can play the other way because you have a massive distribution of your set of people that are dedicated to one way, and it looks like it's going to go that way, and the indicators say it's going to go that way, and then the analysts are saying it's good, whatever. So if you put up 5% of your portfolio to the other direction, right, and it happens to go in that direction, it's parabolic. It's asymmetric in terms of risk to reward. And after accounting for just the zooming out, realizing that we've had so many headlines that should have shot this market down, you could make a hat. You could take a top hat and put a bunch of like headlines, just little like slips of headlines, like a fortune cookie like piece of paper. Just drop them in there, and you could randomly draw one every day. And you'd be like, yeah, that would probably cause a market crash if we just broadcasted it all over CNN and Twitter and whatever else. And then it doesn't. It doesn't. It doesn't. And then you do it again, right? It's like Wheel of Fortune with cataclysmic catalysts for financial markets. This rant went on a lot longer than I expected. I think I'll make the market update in a separate video. And by the time you see this, the market update should be live. So I'm going to upload this as is, and then the market update will be right behind that. So